The stock I've been buying the heaviest by a long shot over the last 2 months or so is a stock called The Trade Desk, and that's ticker TTD. They just reported earnings after the market closed today, but before this aftermarket move, the stock was down 49.12% year to date. After hours, it's making a big time move. Inside of trading today, it also made a big time move, but it's now in the after hours up to $66.49. But that is still way off the highs from this year of about $126 a share. And this downturn for the Trade Desk really started on February 12th of this year. After the bell on February 12th, a few months back, they reported their Q4 2024 earnings and their full year 2024 earnings. And inside of that earnings report, they actually had a miss on revenue, which is extremely rare for the Trade Desk. This is a company that comes in and beats their revenue expectations and beats their EPS expectations every single quarter. Very, very strong track record of beating and raising their guidance. Not only did they miss on revenue, it was a tiny miss by 2.44%, but it's a miss nonetheless. They also forecasted weak Q1 guidance, and that's the thing that made the stock start to crumble. I personally started buying the stock in the high 60s, and I've kept buying as the share price has dipped and dipped and dipped. We saw it as low as $45 earlier this year on April 8th, and I felt like the stock had dropped into a territory in terms of the valuation that it was extremely undervalued, and I had to pick up as many shares as possible because I did not think this was going to last. That was an absolute overreaction from the market to drop the stock from 125 all the way down to $80 in a single day. And then the selling continued, like we said, all the way down to $45. We got that big time market fear due to those Trump tariffs. And that, along with the last thing they reported being a disappointment, just pushed the stock down even further. But this was a great opportunity for anyone who was able to identify that this was absolutely an undervalued asset. Anyone who was buying at those lows were already being rewarded in a major way for buying at those lows, because the Trade Desk, of course, in Q1 came in and crushed numbers. We're going to go through those numbers in a little bit. Now, before we get into the numbers they reported in Q1 of 2025, I just want to run you through some valuation metrics with the Trade Desk and tell you what I'm seeing out there. So the trailing 12-month PE is pretty high at a 76. That's definitely higher than the average stock I would buy in the market. But when we look at the forward PE, the 2-year forward PE, and the growth rates, you'll understand why I believe this is an extremely undervalued stock. The forward PE, taking into account the next 12 months of earnings, is a 33.2, less than half of the trailing PE. Love to see that. The 2-year forward PE is a 29.22. Remember, this is a stock that has a history of beating on numbers. Even when they missed on revenue, they beat on EPS. So these forward PEs are probably actually lower than this. The forward PE this year is probably more like a 31, and the 2-year forward PE is probably more like a 26 or a 27. That's extremely, extremely attractive for a stock like this. I'll show you the growth rates here in a moment. Trailing 12-month EPS growth is 113.95. Current year expected EPS growth is 131%. The 2-year stack EPS growth is 187.87%. And their revenue growth is very consistently in the high 20s. So needless to say, this is an absolute growth beast at an extremely fair value, and arguably it's undervalued based on what we saw in terms of those EPS growth numbers. All right, so let's jump into these Q1 2025 numbers. This was a very, very strong quarter for the Trade Desk. They had revenue growth in the first quarter of 25%, all the way up to $616 million, and that destroyed analyst estimates of $584 million. They had non-GAAP EPS of 33 cents for the quarter, way above estimates of 25 cents for the quarter. I said on my earnings preview video, I talked about 4 stocks. Trade Desk was one of them that I saw at least 30 cents of EPS coming in, but potentially all the way as high as 35 cents. We got that huge beat up to 33 cents. Very strong. Happy to see that. When you look at the guidance side for Q2, they guided for at least $682 million, which is actually a little bit below analyst estimate averages of $683 million. Based on the revenue beat they just had in Q1, I expect another revenue beat inside of Q2. The real number they're going to report is probably closer to $692 million and potentially as high as $700 million. And on the GAAP basis, they had net income of $51 million as compared to $32 million in the year ago quarter. That brings the net income margin to 8% for Q1 of 2025 in comparison to 6% in Q1 of 2024. That's GAAP EPS of 10 cents versus 6 cents in the year ago period. On a non-GAAP basis, they had adjusted EBITDA of $208 million, up from $162 million, and that's a 1 percentage point increase on the adjusted EBITDA margin up to 34%. They had non-GAAP net income of $165 million in comparison to $131 in the year ago period. Like we said earlier, that's 33 cents on a non-GAAP basis on EPS. Now let's get into a couple first quarter highlights. They had customer retention over 95% in the first quarter, and they say it has remained that way for the past 11 consecutive years. What a crazy stat for this company. 95% customer retention for 11 years straight. That's a special product. That's a best of breed product. Results speak for themselves with the trade desk, and that's why their product is so sticky. It's so hard to leave the trade desk because they're bringing so much efficiency to your ad spend that leaving them is just not a good idea. If you're spending, let's say, $2 million with the trade desk, but you're bringing in $4, $5, or $6 million due to the work that Trade Desk is doing and what their platforming is allowing you to do, that's a no-brainer to stick with that company. And then they've got a bunch of product-related highlights. I'll let you read through them here. I'll throw them up on screen if you want to pause and check it out. And then the last highlight that I want to talk about is their share repurchase. They used $386 million of cash to repurchase stock in the first quarter of 2025. They had $631 million available and authorized for purchases, and they used $386 million of that. I love to see when a stock is unnecessarily undervalued, when there's a major dip in the share price for the management team to go out and pick up shares. That is a sign of a very smart management team. I hate when I see a company at all-time highs, a stock at all-time highs, and the management team is out there doing share repurchases. But rather, when a stock is beaten down and their stock price is getting destroyed, that's when a management team needs to go out there and buy up shares, taking those shares off the market, increasing total shareholder return, and increasing confidence that the management team believes that the stock is absolutely undervalued right now. Those are the three main things we get from a share repurchase. And not to mention, over time, repurchasing shares makes EPS look better. Net income can increase by, let's say, 10%, but if a major repurchase is going on, that can end up making EPS grow by 12, 13, 14, or 15%, which is also good for share price because we know that stock price follows earnings over the long term. And a couple things that were not in the Q1 highlights that I wanted to show you is income from operations exploded almost 2x year over year. So from Q1 2024 to Q1 2025, they went from $28.657 million in income from operations all the way up to $54.452 in income from operations. That is a huge deal. They are becoming more operationally efficient. They had revenue growth of 25% year over year, but the operating income growth is almost 100% year over year. That's a huge deal, and it's a great thing to see as a shareholder. Then the other thing I wanted to highlight that the Trade Desk management team didn't talk too much about is the amazing balance sheet with the Trade Desk. So they've got cash and cash equivalents of $1.1 billion. They've got short-term investments of $621 million. They have no debt on the books. Yes, they have liabilities, but none of that is debt. They're losing no money to interest accruing. This is an absolutely bulletproof balance sheet. This is a company that's growing revenue in the high 20s, growing operating income by nearly 100%, growing EPS this year by more than 100%, grew EPS last year by over 100%. But they also have a bulletproof balance sheet with no debt, and they're trading at a 33 forward PE before this aftermarket move, and a 29 two-year forward PE before this aftermarket move. All right, so what am I going to do with the Trade Desk now that the stock has moved after hours? I'll be holding 100% of my shares. I am just now getting started with building my position. I've built it very, very aggressively over the last 2 months because I didn't think the stock was going to stay down for long, but I'll be buying this stock all the way through the $70 range and even into the $80 range. The higher it is, the lighter I'll buy, and the lower it is, the heavier I'll buy. I'm looking to build this into at least the top 6 in my portfolio in terms of allocation, maybe even higher than that. This is a stock I've wanted to own for many years now, and the valuation has never been in a position where I felt comfortable holding the shares. Now it's in a position where I feel like I need to buy aggressively. Let me know in the comments below if you hold this stock or if you're interested in buying this stock. One of my favorite parts of posting here on YouTube is having some conversation with you guys down there. So go down there, let me know your thoughts. I appreciate you being here in a major way. Thank you so much. Have a great day.